Welcome to NASDAQ Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at NASDAQ. Joining me at the market site in Times Square, we have Kevin Mann. He's the President and Chief Investment Officer at Henyon & Walsh Asset Management. And Kevin, you have been on the money all year, slowing but growing. That theme continues to play out.
Thank you. Thank you. I think that came through loud and clear in the Fed's announcement today, even though I still contend that they didn't need to cut interest rates by 25 basis points. They did as expected. And what they came out of those meetings is that there's likely no other cuts this year and probably no cuts next year. And that fits right into our slowing but growing theme. The economy is still growing, albeit slower than what we saw last year. The consumer is still confident and spending. And if you look at the dual mandate of the Federal Reserve to promote full employment and stable prices, you get an unemployment rate of 3.7, participation rate nearly 64%, wages are rising, and inflation is getting near that 2% target. So the Fed doesn't need to do anything else at this point.
Yep, and I agree with you on that. Let's pull up our first chart here. We'll take a deeper dive into the bonds. What are you looking at here?
What we saw coming from last week into this week was the market come to the same realization that we just spoke about. Perhaps the economy is strong enough to not necessarily need any additional stimulus coming from the Federal Reserve. As of last Friday, we had about an 85% likelihood that the Fed was going to cut by 25 basis points. 50 basis points was off the table. This week, that moved to just over 50%. We saw that in the yields. Look at the 10-year going from 1.9 to 1, or rather from 1.55 to 1.9. Spiked up, it's settling in around 1.75 right now. Interesting that the Fed funds target rate is now in a range of 1.75% to 2%, and that's right where the 10-year is as well.
Just because other global central banks are cutting, do we necessarily have to move in concert with them?
We don't. I think we need to look at our own economy, looking at the dual mandate of the Federal Reserve, but we also can't ignore the potential headwinds that we have coming out of Europe, coming out of the U.S.-China trade talks, and of course coming out of the recent escalation in Iran. All
right, let's move along to oil prices here. Sharply higher this week. Saw that sell-off come in a bit. It was, kind of tricky if you bought oil on Monday. What about alternative sources of oil supply?
We got to remember that the U.S. is now energy independent, thanks in large part to our ability to use hydraulic fracturing, or fracking as it's commonly known, and we're not as reliant upon foreign oil anymore. So that wouldn't necessarily have as much of an impact on the U.S. economy as it once did. That oil field that was attacked accounts for about 5% of global supply, and as we understand it, they're about 70% up to original production levels anyway. So I think that impact was short-term and won't necessarily have as long-term impact on oil prices.
All right, now the bright spot here is the consumer for sure.
Absolutely.
Sentiment is really strong here.
Absolutely, and I think that's going to carry through the fourth quarter and into the all-important holiday shopping season, Jill, and I wouldn't be surprised if we hit all-time records again as it relates to online commerce, or e-commerce in particular.
Yeah, I saw some of the forecasts that had come out yesterday, and nearly double-digit gains is what they're expecting. You also have to remember, too, in December 2018, we had the shutdown.
Yes.
So I think you'll see more people coming out, and that can really blow away comp numbers for the holiday season.
Without a doubt. And if, in fact, we get as strong of a holiday shopping season as we expect, you could see U.S. GDP for the fourth quarter and annualized come in the 2.5 to 2.8 range, well above what people thought coming into 2019. So again, slowing but growing.
All right, Kevin, as always, thanks so much for joining us at MarketSite.
My pleasure.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.